AVID Investors. Here's the market update for July 2023. We sometimes hear things around the water cooler, and Mike Swope is a man of few words, so I always love an opportunity to quote him. And what he has said in his production update, where he actually measures Swope Investment Properties' share of the residential income market, the rental market, compared to all the other brokerages, because even though we're a small boutique specialized brokerage of maybe 10 agents or so, oftentimes we have the lion's share of, or a good percentage of the residential income business in the Valley, even when compared to brokerages like Silver Creek that have gazillions of agents, to use the technical number. Anyway, so he looks at what's going on in the residential income market. He's been a fixture in the market forever. He talks to all the other income specialists, and he says, as we all know, this year started out much slower than it did last year. And our production in the second quarter was fairly active, mostly only due to residential deals, not the residential income. In fact, investment deals have been pretty much non-existent. And that's what Mike's hearing from the other brokers also. With the second quarter improving, he hopes this is an indication that the rest of the year also will improve. So there's a lot packed into a man who chooses his words very carefully. You see optimism that the year is improving. You see that residential income market hasn't had as much going on as it typically does. It's about half of what he's seen last year at this time, but that the market is still happening because there's still business. It's just folks who are owner occupying. And here's what that looked like. The inventory, we had an inventory explosion that we reported last month, and that's why there's that big tall arrow next to the decrease in arrow, and then that inventory dropped. I think that Shane Brown did this slide this month. I think there might be a couple, like, I might have found a correction, but I think the arrows are safe to look at. But there are actually some active fourplexes that we'll see, and he ran this data a little bit ago, a couple weeks ago, the 6th, I think. Pending deals dropped as well, both in the Ada and Canyon County duplexes and fourplexes. And so, of course, sales followed suit, and that went down. Now, sales had been up when we talked about this last month, and now they've dropped. Pending deals has dropped. Inventory was up, and now it's down. And so absorption is all over the place. And so is this data. It's all over the place. And so we're finding in the real estate world, there's not a clear defined trend. We're not seeing a ton of bidding wars on things, but things are still selling. So if you are planning on selling something, pricing it up front correctly is really key. And we can't be super aggressive. Buyers are adverse to bidding wars. So as an agent, I'm not taking your offer and touting it and saying, bring me your better one. It's just, we're kind of all playing it cool. You want this? You got an offer? Let's look at your offer. Oh, you want this? You got an offer? Let's look at your offer. But we're not really in that position to pit buyers against each other. So it's not as frenetic. And when it does move really quickly, oftentimes we're seeing those buyers reconsider, and we're seeing things come back on market. So for example, we went after a triplex recently with some clients, and they wanted, to create they weren't going to review offers for 10 days. They're rewriting the rules. And then they told us they have this cash offer as if they're going to induce us to come in higher. And we just kind of decided to play on the sidelines. But when it came back on the market, that's when we said, okay, now can we just get a response in 24 hours and give you a nice solid offer? And you want to do this? Or are you still playing games? So no more games. Everyone's just kind of getting things done, and sellers have a little vulnerability when it comes to things being back on the market. Here's what's active now. These are the fourplexes in Ada and Canyon County. And the one that was most interesting to me is the one with only 5 days on the market. The reason is a lot of these other ones, Surfers Point, Rocky Point, Ski Jump, a lot of those are the same type of community where you have closed management. And that means it's not open management, and that means you use the manager that is in place for the community, and you don't have your choice.
Tony talked about that a little bit on the last meeting.
Yes.
He didn't sound too impressed with that property.
Yes, right, correct. And it's also, there's just no kind of fear of competition or getting canned if you're the automatic manager. And it's hard to impress in property management. It's a hard business to impress your clients. You're really only calling when there's bad news. And so, but there's also a lot of ways to be bad at it. And so I just want to be able to choose who the manager is. And so does Tony. Yes,
What did you
Rich.
call that term? Hard management?
Open or closed? Mhm.
What if a person came in and said, well, it's a fourplex and I'm occupying all four and then I rent one to you? Or,
Yeah, I bet you could do that. Some of them have a thing where they won't charge you the management fee on the one unit that you own or occupy, but I don't think they would let you, they're still gonna charge you, you can only occupy one. Yeah, and it actually really helped us. We had that Lucky Lane fourplex that we just closed on, and some of the calls that we were getting, their first question was, is it open management? Can I bring my own manager? And we had that right in the remarks, but people, I think it helped us that so many of the fourplex choices didn't have that option and ours did.
you say how much that goes for?
The number that we thought it was going to close for, which was significantly above asking. And we listed it at did we list it 875? I think was the list price. So we closed for 9, I think it was 42 or something around there, 938. Yes. And we did have, with that, it was not an as-is purchase. So there was a list of inspection requests. And as the agents, their agents were considering asking just for a chunk of money. They didn't have time to get bids on what all these little requests were, including a roof. But we worked it out where they asked for the things to be completed. And that put a little pressure on the property management company, a lot of pressure on them, a lot of pressure on us as their agents, but that's our job. And if we had made up napkin numbers in the beginning, those napkin numbers would have been pretty high. And instead, we ended up getting that to be a really reasonable cost.
I guess I do about like Lane. What I was thinking about is the one that's by the railroad. Is that one sold? That fourplex in Napa,
Oh, like literally on railroad.
yeah, right next to the railroad, basically railroad. I don't see it up there.
Yeah, and I don't remember what that closed for.
I think
Yeah. Now Lexi Lane is in Nampa, and I like that community. And like Lucky, Lexi has, some of the roofs have been replaced, some haven't. So it's got this awkward age. When you start getting close to 30 years old as a property, if stuff hasn't broken, there's room for a lot of things to start breaking. If you've got original HVAC and stuff like that, which sometimes it lasts that long. But then when you go to sell, that's kind of an awkward time to buy or sell. And that's what we had with the Lucky Lane, which is why it was nice to kind of go ahead and help control those costs and not just get a credit. And Lexi has the same concern. I talked to a buyer who considered it, but I like that property. I just think they've got, the market has responded that it's not quite ready for 900,000 there. So, especially considering the condition, the roofs are going to be older. But that Maple Grove property, let's look at the most expensive fourplex on the board.
Is that brand new one where there's two of them sitting there?
Does it look like this?
Yeah.
Yes. Yeah, and so they're building them from the ground up and they're touting them as energy efficient. They're all separately parceled, so they're kind of condoed out. And so I guess in some ways you could probably sell them as condos, since each unit has its own parcel number. And so in some ways you're buying 4 units when you buy it. And they even, I think, have it listed where you can just buy them individually, maybe as well on the MLS. So that's interesting. And if you own all 4, I just kind of wonder from a tax standpoint, I don't think you're going to get the fourplex tax benefits. I think you're going to be taxed on this higher number, but there's a few 3-bedroom units. It seems like they've really tried to do a quality job with them.
I watched those being built and they poured a lot of the foundation stuff and then they sat for
quite a long time, I wanna say 6 months or maybe longer. Now all of a sudden they finished them up, so it's kind of finished one.
Yes,
Is it just one?
well, one's ready and the others are gonna be ready in the end of the year, December-ish, and then the other two are gonna be ready in next spring-ish. So I thought that was an interesting, I mean, it's just something that we don't see every day, this price point or this separate parcels or the whole shebang. And I like it that there's only 16 totally going in full because, and that they're staggered a little bit. It's just tricky if you get say 50 new builds all at once. So. Okay, so pricing on fourplexes. It's really good to monitor these, and we're looking at only 2 sales last month, so inventory has been interesting. And they had more amenities, and what Tony Dross pointed out is that they weren't necessarily selling for more despite they had access to a pool in their community. And so right now, the average price for the fourplexes in Ada County, strictly looking at Ada County, is in the mid 900s. And when we don't have a ton selling, a little data anomaly can really spike the graph. So that red line is the 6-month trailing. And here we show the GRM. And as a buyer, you want that number to be lower. As a seller, you want that number to be higher. And as a seller who wants to do a quick valuation on what your properties are worth, you can just take the property price and multiply it by you can take the rents and multiply it by the GRM to get the price. And so right now, we've seen a GRM trending downward until May, and then it started creeping back up. And it looks like it's back at or near and around that 180 point again. And for cap rates, which is your net operating income over the price or over the value, we've seen they've been below 5. And so current 6-month trailing average is 4.8, and in May it was 4.75. But they've been continuing to trend upward overall. And that's better for buyers. When that cap rate trends upward, that's better for buyers. And so I believe that that's an effective interest rates putting some downward pressure. Okay, so what about the 5+ market? Remember, we used to not have a ton of these. We had all these fourplexes, and all of a sudden we don't have any fourplexes, and the 5+ properties are sitting. So that's just been an interesting trend that I've been saying now for a few months, and we've looked at a few of them. But their cap rates, you're just not really getting much, or haven't been getting much in the way of economies of scale. You know, to sink so much money into one asset, and you're only 0.2 or 0.4, you're not even half a percentage of necessarily above the average out there. They're just, people they're not moving. So once they get listed, they're sitting, where it used to be the opposite, and they would fly off the shelf because people wanted to scale. Because how much easier is it if you own onesie, twosie, heresie, theresie, and especially if you self-manage? I mean, imagine just having one building to manage. You mentioned a couple different cities, Steve, you know, a couple of you have different places. One building that just sounds kind of slightly more packaged. I know that's something that Tony is hoping to do eventually. But right now that's just what they're looking like. And then the single family home market, everyone here either owns a single family home already or is interested in real estate enough to be here. So that single family home market, that could be an investment property, it could be an owner occupied property, but these prices are relevant to all of us. And what are we seeing? It's up again from last month, but it's still down 8% year over year. Okay, the number of solds are down, the days on market are up, and it's only up 120% from last year. So last year at this time, stuff was still flying off the shelf and it was about to chill out. But we didn't know it yet because this data is delayed. We're looking at June's data, and July is when things really started chilling out. I don't think that's going to happen this year necessarily, but it may. We don't know. But I think we're still kind of recovering from that chill out, and it seems like it's pretty optimistic. Canyon County Median price is down from 415 to 405. And so Camden County, I think, has taken a big hit, also probably in the rentals as well. I don't know if you said that earlier when we spoke.
I don't think so, but we don't have too many in Camden County.
Okay, oh, that's right, yeah.
Yeah.
So some of the folks who do a lot of renting in both communities have seen Camden County was just racing ahead of Ada. All of a sudden, the rents were going higher, the prices were going higher, and all of a sudden, Camden County's chilling out a little bit. So days on market are down monthly, but up year over year, 165%. So we're definitely a different market than we were a year ago. And what's crazy and super timely, and thank goodness you're here to hear about this, is this really takes hold in the rental market. And so Angie has some amazing things. So I won't go into any rental stuff because we have Angie here today. But rates are still high. They're holding us back. They're not crazy, but Dave's rates, you can get 6.5 as an owner occupant, and then you're looking at 7.5 as an investor. And it depends on which abracadabra scenario you choose and how short you're willing to have your fixed rate. Okay. But so in general, like we said, starting price is the name of the game. So, and this may apply to your rentals as well, but Angie will let us know. But if you're listing something, starting price is the name of the game. If you're buying something, watch for something that started too high, because let's go get it. We're going to not offer full price anymore. If you start too high, you're setting yourself up for high days on market and below asking offers. But the time is moving slower. So 22 days isn't necessarily a lot of days on market. Last year, 22 days was high days on market. This year, buyers are taking longer to spend their money, especially as you approach that more expensive price point. Buyers have a little bit more opportunity and they're just taking their time. And condition always matters, but now more than ever, because there's actually competition out there. So with higher price comes higher expectations. And we got a hall pass on all of that stuff when everything was just flying all over the place. And so it's time to bring it back to the ground. Pay attention to your condition and your curb appeal, because it's not already going to sell and rent before you even get the darn thing on the market, because everyone's banging down Idaho's doors for all of our houses. That's just not there anymore.